I think
we can wait for a few minutes if that
yeah.
helps the members and participants.
We can start, sir.
We can start.
Yeah.
Yeah.
Yeah. Friends, good afternoon. Once again, welcome back for this virtual session. We are with us Director NIBM, Professor Parthare. Parthare has assumed as a director at NIBM since 2021. Prior to this NIBM assignment, he was with the Indian Staff Management, Calcutta. He was a professor at IIM, Calcutta from 2011 to 21. Previously, he was advisor to Executive Director of International Monetary Fund, Washington, D.C. In 2007 to 11. And 1989 to 2007, he has long served in Reserve Bank of India, and also he headed the Department of Economic Research as an advisor to the in the department head of the economic research also. He studied in Calcutta, Mumbai, and Oxford, and is a prominent macroeconomist. Writes in a major economic and business what you call newspapers for the business lines as an OPEC, and also is in a macroeconomist, right? Written many books as well as research articles in the prestigious and also international reputed journals also. Once again, we are honored you with your presence, and also agree to this session after the post conclusion also, since it was an what you call unforeseen time. We have to with your this one permission, we are taking this liberty to once again host you in virtually. Thank you very much. And sir, over to you. We have people from the northeast too, that is from Manipur up to Kerala. So we have a wide variety of institutions representing, including some of them a large microfinance institution as well as the smallest one also. At the senior management level, from the CO to even the business heads also in this program. Once again, we are very happy to listen in this session on the current macro aspect, also leading to what are the implications to India on economic and what you call also for their business from the microfinance business aspect. Thank you very much, sir. Once again, over to you.
Thank you. Good afternoon and namaskar. I'm sorry that I was supposed to give you a talk while you were here in the campus. Because of a personal bereavement in the family, I couldn't do that. So I thought I will rather, own business opportunity, and will get, thanks to Naveen and you guys, that I could talk to you. In case you can, please make your camera visible. So, I'm habituated with the faces rather than talking to some black boxes. If you can't,
Yes,
that's fine. If you can, just make yourself visible. So
yes,
that's it. Okay. In case your other predilections allow this. Okay. I think you have to give me a sharing rights.
Sangeeta madam, sharing rights, can you give?
Given, sir.
Okay.
Given. Okay. Is the screen visible?
It is appearing. Yes, sir.
yes, sir.
Okay. So let's get going. We have two parts of this talk. One part is essentially about the global macroeconomics today, and the other part is your specific sectors that currently undergoing some challenges and some interesting times. So the global development, as the saying goes, think globally, act locally, and panic internally. That's exactly the thing that you guys as the leaders of in the MFI sector should have. By the way, I have certain number of slides. It doesn't matter. Feel free to ask me any question at any point of time. And there's no question that is silly. So at any point of time, you can ask me a question. So how was, if you look at just the immediate past, the global scenario, 2020, 2026, there was pandemic. All of us remember that. And the pandemic, as a result of which you have the pandemic triggered liquidity crisis. And then naturally, all the central banks of the world opened the floodgate of liquidity. But then at some point of time, chickens will come home to roost. So therefore, at some point of time, there was a huge monetary tightening circle. And with the monetary tightening cycle, there were in 2023, some of the major banks failed, like First Republic Bank, Silicon Valley Bank, Signature Bank, and Credit Suisse. All these banks failed, and they have been questioned. The financial technology and AI in particularly has entered the traditional banking model. I'll touch upon this. And in geopolitical scenario, there was huge turmoil, as a result of which there was once very integrated capital flows. And I'm aware some of you may be getting some fund from overseas, so that there was some tightening. So broadly, liquidity tightening, bank failure, entry of AI, and leading to all this, and geopolitical disturbance, as a result of which the capital flows has been tightening. So what has been the feature of the monetary policy? The first was, initially after COVID-19, there was extraordinary monetary accommodation. What do I mean by that? How does an expansionary monetary policy work? How does an easy monetary policy work? By reducing the interest rate. But when the interest rate is already near zero, what would the central bank do? Think of this way. Suppose I write a small piece of paper that I owe Sajan the sum of rupees 1,000. He takes it, gives me 1,000 rupees, as a result of which there's a loss of his liquidity. Okay. Now, suppose central bank is accepting this piece of paper that Mr. A has borrowed from Mr. Varghese 1,000 rupees and accepted part of their liability, part of their asset to print money, then the whole problem of liquidity is solved. This is precisely what has been done in US Fed. They accepted all and sundry assets into their balance sheet. How much they can do? The theoretical answer to this is infinite. How long they can do? They can do till the time inflation is back. And remember, inflation is back in the advanced countries is a good news at some point of time. Because a very low inflation means there is lack of purchasing power. We all feel very happy if inflation comes down, isn't it? But remember, you also, because you think yourself as a purchaser of commodities, but you also sell something. I sell my labor services, you sell your intellectual capital, you sell various things, so you are being compensated for that. When inflation is very low, that means incomes are not growing. So very low rate of inflation is bad news. A very high rate of inflation is bad news. So what we want is a moderate and stable rate of inflation. So what happened? They didn't do. They initially hugely built up the liquidity. How much they have built up? One number will do. Between 2020 to 2024, the balance sheet size of the US Fed went up from 4 trillion to 9 trillion. 9 trillion is 10 to the power 12. 12 zeros. In our way of calibrating, it is lakh crore. So that much of liquidity has entered the system. So therefore, it is no wonder that inflation shot up there. And when the inflation shot up, what do? They started shrinking and they started increasing the interest rate. As a result of which, many banks failed, as a result of which there was a crisis. Okay, how was the monetary policy effective? And it is here what happened globally. Globally, the fixed rate mortgage rate in United Kingdom and Scandinavian countries made huge trouble. Corporates that locked historically low long-term debt faced problem, and the proliferation of NBFI sector came up. Please note, in a broader scheme of things, you will be looked at as NBFI. Because not for any other reason. You are a financial intermediary and you are not a bank. In that very broad, though in Indian context, it is different. Now there, the Bank for Universal Settlement, BIS estimated that the NBFI sector exceeds the total banking assets. So do not underestimate them. They are very big. They are very big, not individually perhaps, but collectively they are big. And they're heterogeneous. They are different. Goldman Sachs is an NBFI and you guys are also an NBFI. But then therefore, you need differentiated approach. You need specific approach to handling the regulatory structure of these NBFIs. Two things came up globally. One is Basel III, the other is climate change. What did Basel III do? They increase your capital. And for legitimate reason, you are unhappy if your capital requirement increases. Because that much of money you cannot use for your business, be it loan, be it investment, anything. So capital norms became stricter and newer capital norms came up. Maybe you are not affected because you are not that big. The bigger banks have been affected. And to that extent, bigger banks have been affected, your source of fund could face certain trouble. And then what happened? There was a huge climate-related issues. The huge climate-related issues, the Network for Greening and Financial System, an alliance of central banks and supervisors, they have developed scenario frameworks. And the forward-looking institution think of climate change related things. Now, this in some way took a backseat when Mr. Trump became the president of the United States. When Mr. Trump became, he by nature, he withdrew from Paris earlier, so he was not very exuberant about climate change. But otherwise, globally, in particular in Europe, there's huge consciousness about climate change. For example, between two of the MFIs, one gives loan to a green sector and one gives loan to a brown sector, the European funder will definitely prefer a green sector, even if the profitability is lower. Okay. Around this time, another thing came up, namely CBDC, or central bank digital currency. Now, central bank digital currency is not necessarily has arrived, but it is in the process. But this process has been in a number of countries. In China, it is there. In Europe, it is quite there. Europe Central Bank Digital Euro project is quite there. So this is happening there. Finally, what happened is rise of embedded finance. You know who your competitors are, but you don't think something like a technology company is your competitor. There's a term in the technology sphere called Magnificent Seven. There are 7 companies who are very big. They have big muscle power. They are NVIDIA, Microsoft, Apple, Alphabet, Amazon, Meta, Tesla. These 7 companies, let me just tell you how big they are. NVIDIA's aggregate market capitalization in the beginning of this year, is or surpasses the market capitalization of all companies which are listed in National Stock Exchange, Mumbai. Imagine one company called NVIDIA, its market capitalization is more than all companies in NSE. That one number should tell you how big they can be. They are your competitor. Your means bank's competitor, they might even come to your competitor. Then the e-commerce giant, small loans, small linked specific loans like Amazon, Alibaba, Shopify, eBay, they are coming up. Then the funny thing, you all thought that Uber is essentially a taxi services. Now, as you know, without owning any taxi, so this ride-hailing application like Uber or Didi, Grab or Lyft at South Asia, they also have the potential to have certain banking activity, in particular, some short-term consumer loan. And then finally, there are telecommunication operators like T-Mobile in US, M-Pesa, Telefonica. So please understand the global scenario to financial intermediation has changed. It is no longer limited to bank. Who would have thought that by sending a remittances has become in India equivalent to I will GPay you? Who would have thought it, maybe 10 years earlier? But Google to you is essentially a search engine in the internet. That Google could turn out to be providing you certain banking services. Who knows, Google might own the biggest bank in the days to come if the US regulatory agencies see it differently. So there is a reasonably difficult situation at this. Before I proceed further, I want to tell you one message, and for which I constructed this table. This table are the constituent companies in US Dow Jones Industrial Average Index in 3 years, 1884, 1956, and 2025. Now take a minute, study this slide and tell me what is the peculiarity of this particular slide, of this particular table. I give you a minute. Look at it. What is the peculiarity of this particular table? Anyone? Come on, try. At the worst, you'll be wrong. Nothing else. Unmute yourself and talk, and then again mute yourself.
In the past, it was basically all manufacturing and such. Now it's mostly like in IT or financial sector.
Right. But that's the similarity number 2 or 3. The first most important thing is there is no common company. There is no company which is appearing all the 3 lists. Which means what? Which means companies are born and companies do die. Birth and death of companies is imminent under capitalism. Some of the companies in India do not die because they are held by, they are owned by the government of India, and government is perpetual. So Indian Railways don't die. But other companies may be born, they may die. There's an imminent forces of industrial capitalism. Companies which are proficient, efficient, they survive. Companies which are dinosaur, they die. Okay, so that's the broad split. Yes, indeed, its recent past is more tilted towards information technology. Yes, who would have thought that this damnable company of Mr. Musk, which promises people to take to the outer space, will be a great success? Who would have thought, that tourism could be towards moon and the Mars? We did not think it over. Okay. The other thing, please do remember that finance has become a weapon. The modern warfare, when it is fought, it is not only fought in terms of the battlefield, it is also fought in terms of finance. Example, the exclusion of Russian financial institutions from SWIFT. Example, even earlier, there are accelerated reserve requirement away from dollar denominated asset. People have invested in China's chips, cross-border interbank payment system, as a result of which there are some faint signs of de-dollarization. Why do I say faint signs? Because dollar is still now the god in the global financial system. But the god is showing its feet of clay in these days. And therefore, we do not know. I'm not in the business of speculation, but there has been a slight move towards de-dollarization. Any questions at this stage? Or I'll go ahead. Any questions?
No, sir.
Okay, great. So other things is private credit has become a huge market. Private credit is, if you see, an investment in private credit has outpaced other assets. Only private equity is more than private credit, but till about 2016, private credit is very big. Why that's threatening you? Because private credit can take your space. Somebody, a philanthropist, somebody, a big investor, but a philanthropist, could enter into your space in a roundabout way. They may capture you, they may acquire you, or they may fund you, or they may even compete with you. So private credit can enter in a big way. The other, please understand, great trouble is the high debt GDP ratio. Remember, when government spends, government can earn only from two ways: tax and borrowing. There's no third way. I mean, third way could be, something like profits of the published undertakings, but that's small. So basically, in a crisis, government cannot tax. So in a crisis, what government will do, government will borrow and spend. So we had the crisis called COVID pandemic. Because of this, what happened, government debt to GDP ratio has become very, very high. Now look at it. Tell me, in the slide that you are seeing, the red rectangles define debt GDP ratio. Japan's debt GDP ratio is above something like 225%. Sudan's debt GDP ratio is something like 175%. Which country is in crisis? Which country has more risks? Japan or Sudan? Number wise, Japan is 225%, Sudan is 175. I'm asking you, which country is in trouble?
Sir, from the numbers, from the ratio, it appears to be Japan, but
Right,
yeah,
right. Absolutely, you are right. It appears to be Japan. But let me tell you the answer, it is not.
yes,
Then you would speculate why it is not.
yes, sir.
Why it is not.
Because the debt that they have taken might be very small, which is why the ratio has become very high.
No, the ratio is very high.
So the
Ratio is
ratio,
225%.
but you said, oh,
This
the,
is debt to GDP.
yes, yes.
So
So
that's why for comparison, I am doing it.
yes, sir.
Japan's debt is very high.
The debt,
Sudan's rate is less high.
yes,
But
sir.
I am saying Sudan is in more trouble. Why?
Yes,
The answer lies in which country the debt is denominated.
yes.
Japan's debt is denominated in yen,
Okay,
which they can print because yen is a hard currency. Yen is part of reserve currency.
okay.
But Sudan's debt is in dollar. Dollar is not a currency of Sudan.
Oh,
Sudan has to earn it or go to the IMF or go to Paris Club rescheduling for getting that. So please understand that despite the fact Sudan's debt is lower than Japan, Sudan is more exposed. Because the debt, not only the number matters, it matters in which currency it is denominated. We are fortunate in India, we have been clever in India that we do not have enough dollar denominated debt.
okay.
We have debt mostly in domestically. We do not have huge debt from foreigners, a name for which we say India has limited capital account convertibility. Because we have limited capital account convertibility, we don't allow to go abroad to take a loan. Think of this way. I want to buy a house. SBI home loan, how much it will be? SBI home loan, the rate, if I take a crore, what would be the interest rate? 12?
Yes.
Less? At this juncture?
Around 8 to 9% or 7 to 8%.
7 to 8%. Suppose a US bank gives me a loan at 4%. It makes sense for me to go to the US bank to take a loan as long as they're happy with me that I'm in Pune, I buy a plot of land or I buy a flat from a respectable company, then an American bank gives me a loan, provided RBI allows it. Suppose RBI is allowing it, what's the trouble?
Currency.
The trouble is that American bank will give me a loan in dollar.
Yes, the currency.
I earn in rupee.
Yeah.
When I have taken the loan, exchange rate was maybe 90. When I'm repaying the loan, the exchange rate is say 97. So that difference, who will bear? I have to bear?
Yes.
Or in that case, if I take somebody, I have to go to another bank to have a bridge loan. So currency risk is an inherent example of any dollar denominated loan. We were
हमारा चला गया ये नेट चला गया अरे
happened, and now agentic AI came. Because of this, the regulators also started happening. Europe is very much active in that. And that is going to affect us in a huge number of ways. What are the challenges of AI in our business? By which I mean essentially money lending business or banking. But again, you also guys also are involved in this. One, first, algorithmic bias and fairness. Suppose you don't look at the faces, apply the applications, and the machine will determine. So, for example, it has been found out that many of the African Americans are defaulters. They are defaulters not because they are African American, they're defaulters because some of them are poor. The machine may not understand it. Machine may just look at the thing is your nationality, your backdrop, and the moment you said African, you might be deprived of the loan. Similar things happened in India in terms of scheduled caste and tribe. Many of them could be poor, so they might be deprived. So algorithm has its own bias. There has to be regulatory scrutiny. Cyber security is very important issue when it comes to AI. And then DPDP Act has already come up. Data privacy and governance is an issue. Finally, the most important thing is talent, culture, and organizational readiness are also an issue in terms of AI-led banking. So AI cuts in both ways. It threatens your business model, but it also affects it in a favorable way to some extent. So you have to adopt it, no doubt, but you adopt it at your own terms. Because if you do not adopt it, your competitor is going to adopt it. So there's a broad thing I wanted to say about the generic things that is happening globally is D&H. Any questions? Otherwise, I'll move to how the global economy is doing at the current juncture. No, because lack of questions can be interpreted into two ways. One is I'm doing extremely well. Otherwise, you're completely disinterested, very hungry, and therefore, you just made your presence felt. So I'll be generous to myself and I'll say that I must be doing well. Okay?
It's very interesting, sir.
Yeah, understood, sir.
Okay.
Yeah.
So let's look how these are all very generic things. But in terms of numbers, how the world economy is doing in terms of numbers. These are the latest number revealed by the IMF in its World Economic Outlook of April 2026. Look at the table and tell me which country has the highest growth rate.
Which country has a
Highest growth rate.
Okay.
These are growth rate, GDP growth rate,
Yeah.
real GDP growth rate. Which country?
India, sir.
India.
Yes. See it again. India, 7.6, 6.5, 6.5.
Yeah.
So legitimately be proud, but don't be arrogant. Why I say don't be arrogant? You can be legitimately proud. India's economy is doing great. It is 7.6% growth rate in 2025. In 2026 also 6.5 is a respectable number. But why you should not be arrogant? Because you have a large population base, 1.4 billion. In per capita terms, you are just one notch below Bangladesh. So remember both the numbers. You are a large economy, fifth, fourth, and at some point of time, you are going to be the third largest economy. That's very good. But in terms of per capita income, you are quite low. So please understand both the things. But at this juncture, Indian economy is doing well. Statement one. Statement two, look at the right-hand side. Right-hand side, regional geopolitical risk. Geopolitical risk has gone up hugely. Now tell me, which is a country which has quite low geopolitical risk?
North America.
Yes, and that's funny because they are the source.
Yeah.
They led to those wars, but they are not that affected because of geography. For example, which is the worst affected by the Russia-Ukraine war? Germany.
Yes.
Because Germany is greatly dependent upon Russian gas for its heating, for its air conditioning. So that is shrunk now. So Europe is hugely affected. We also are affected. There's a huge geopolitical risk that is going on. So this is broadly the background. With this background, I'll enter the geopolitical sector, the standard thing. So in one word, what is there, what is happening? So to sum up, I can only say what is happening is at this juncture, your sector is under challenge. There has been various elements of that channel. Non-banks is otherwise doing well, but there are competition from various kinds of companies, what is called embedded finance. AI is threatening your business model. Geopolitical risks are threatening your funding pattern from outside. So at this juncture, you stand in this situation. So what specifically are you doing? This is where I move to the next part of my talk. Any question on what I've covered so far? If not, let's, yes. Sorry.
Not yet, sir.
Okay.
Yeah.
So maybe in the end, we'll have some time.
Yeah,
I'll finish it by 1 o'clock, then we can have a discussion. So
Yes,
if you think the notion of development finance, the notion of financial inclusion, notion of finance for the poor is for long. And we have been experimenting with various models. If you think of 1904, the cooperative credit movement, 69 bank transaction came precisely that. 75 there was regional rural banks. 82 NABARD came up. 92 the SAG bank linkage came up. 2000 NBFC MFI model came up. And 2015 the small finance bank came up. They're different things, but this was happening. And in a remarkable regularity, the sector has been facing some crisis. And these are boom, bust, regulate. You are booming very high, then there is a bust, the moment bust comes in, the bubble gets burst, then immediately the regulators start regulating you guys. And there are various such things happen. Krishna District 2006, Andhra Pradesh 2010, Demon 2016, COVID 2020, and the over-leveraging wave of 24-25. So various things have come up. So the typical thing is boom, bust, regulate. That's the kind of a cycle. Again, I've never worked in your sector, so my knowledge is secondary. You can correct if I'm wrong, but I'm just trying to cover the big picture. Okay. So if you say the recent ones, the MFI sector, The recent sector was clearly mending the earlier various stress cycles of Andhra and Demon are clearly mending. The structural crisis, structural issues in 2020s, borrower, product, lender mix, regulatory structure are changing shape. And macro institutional, Indian macroeconomy is in transition, its inflation process, its interest rate regime, its credit system. Microfinance sits on the downstream of all of it. They are takers in terms of the macroeconomic forces. 25 was easy macro. Very easy macro, real GDP growth was good. Repo rate, there's a cut, 125 basis points. Headline CPI was very low, 1.5%. Liquidity, huge amount of liquidity was injected in the banking system, something like 6 trillion rupees.
What is CPI, sir?
CPI is Consumer Price Index.
Okay, okay. Yes.
Because the wholesale price index tells you some other number.
Okay.
RBI looks at the consumer price index.
Okay.
So that's how RBI does. The inflation targeting in India is in terms of the consumer price index. Okay. 2026, now weather is slightly more complicated. The June repo rate was held. Growth focus was cut from 6.9 to 6.6. Inflation projection was raised 4.6 to 5.1. Again, oil price, geopolitical risk. And now certainly you hear in those pink papers, financial papers, the word stagflationary. And the greatest of all, rupee is under pressure. Roughly 14 billion of foreign equity outflows happened. Policy response includes capital gains exemptions for FII and wider fully accessible route for G6. So here we are liberating our capital account. The extent of lack of capital account convertibility is getting reduced. India's trade deal reciprocal tariff from 15 to 18%. Again, yesterday, Mr. Trump did something again funny. The tariff regime seems to be back. And for us, the falling rate, abundant liquidity phase, probably over. At this juncture, cost of funds is unlikely to fall further. It may remain constant or it may firm up. I do not know what is in RBI governor's mind or what is in MPC's mind, but it might go up. So the very easy time that we have seen in 2025, in 2026, you may not see this, and this is primarily on account of geopolitical tension. Remember, while there are some degree of urbanity, 75% of the microfinance is rural. Value is somewhat created where people do not work, agriculture employs, nearly half of the workforce grows at 3 to 3.5%. Fiscal consequences, state under rural distress, which was subsidies and loan waiver. And if you ask me, one of your biggest enemies is the loan waiver schemes. Because the discipline that you inculcate, the discipline that you instill among your lenders, one loan waiver and that discipline is gone. This is like, I think it, no offense meant to any of you, it's like I teach and then suddenly say, Dr. Naveen Kumar decides to give some grace marks to those people. So I teach with a very iron hand and say, if you do not study well, you are going to fail. And he comes in and he gives some grace marks and everybody gets passed. Then the discipline that I have brought earlier is all gone. That's a major thing. So there could be offsetting. I'm not speculating, but there could be a strong, all these consequences. State welfare spending is there, moderate rural inflation is there, and there are other trouble of direct benefit transfers cushion. The contraction. The contraction could be, when there's a contraction, quality is often chosen over scale. You don't want a huge increase in your business, but you want an increase in sound business. Gross portfolio shrunk. This was from I think, if I remember correctly, from a Goldman Sachs report. 25-26. Sorry, PwC report. 17%. December disbursement fell 15 to 26%. This was not a drift. It was deliberate retreat to tighter underwriting, pushed by regulation and guidelines from SROs like you. The guardrails you have formed up, the sector serves something like 5.5 to 7 crore low-income women borrowers, counting household, close to 30 crore people. About 3/4 of this lending is rural. So you have a major social and economic role to play, but this year may not be as smooth as you have seen last year. The lender mix, you have NBFC MFI share of activity is reasonable. The strategy question is the sector reliant on the wholesale funded NBFC MFI or more or less resilient than the bank heavy mix it replaces? ILFS story is in the cautionary tale. Wholesale funding is a soft underbelly in any liquidity squeeze. When there is a liquidity squeeze, if, as and when it happens, there might be some trouble. 2022 is a watershed year. Your March 2022, the regulatory framework Microfinance loan replaced the older framework. This became collateral free, total payment obligation cap, board approved pricing policies came up, and 24-25 over leveraging episode has sort of could prevent over indebtedness. Why? Two things, two-tier structure you have. You have the RBI principles, you have the SRO guardrail. As of December 25, nearly 96% of the loans were compliant with RBI and SRO norms. The institutional point, India's microfinance regulation has evolved essentially the two-tier strategy. Regulators sets principle, and the SROs supplies operational guardrails on shared data. Arguably, a model the RBI is watching for other things. So if this works, this is going to be a success story. 25-26, you could see some conservatism. Qualifying assets could come down. NBFC, MFI direction could come up. The PSL direction could come up as well. These are clarified. These are certain regulatory changes that is happening at the current juncture. Two lessons from history. First, every crisis that your sector had, and remember, I have not worked in your sector, so my knowledge is essentially from second-hand knowledge, from reading books or reading journals or reading information. Every crisis in India's rural credit has been at root a crisis of information. When you do not know your lender, when you do not know your borrower, this is essentially difficult. The lender not truly knowing the borrower's total obligation leads to a difficulty. What is genuinely new is information infrastructure finally exists. Near universal bureau coverage plus guardrails developed by you, which are operated on bureau data, made 94-95 stress was detected and corrected faster than any other previous episodes. But please note, since you handle a large number of people and large number of poor people, large number of underprivileged women, political risk is endemic. And before this talk, I was just discussing with Professor Naveen Kumar. And as you understand, in some of the states, already the clamor for loan waiver is going to come. So therefore, in that sense, political risk is endemic to lending to the poor in a democracy. Okay, what households cash now become observable through UPI, direct benefit transfer, account aggregator stack, is turning household income assessment from an estimate into an observable. You now have much more formal data. AI-driven underwriting and collection brings some sort of efficiency. And the JLG technology for substituting, the collateral for information. The group lending activity, the joint liability groups becomes a different things. What are the latest trends? These are from the data of the latest financial stability report. And it's good to see the credit to microfinance increased for the first time after 7 quarters of decline. That's point number 1, credit outstanding. But the borrower base also continues to shrink, down by 22.7 lakhs in the latest quarter. Now, this is both good news and bad. Suppose a part of this is coming because you yourself have become stricter, you yourself are looking for quality more, then this is good news. But suppose these are taken by your competitors, they're getting from somewhere else, therefore that's a bad news for your sector. So this shrinking of borrower base is, you would be able to enlighten me more than I do. Asset quality showed continuous improvement. Share of 31 to 180 days past due declined for the 5th successive quarter. So your asset quality is improving. You are being more careful, if not more conservative. At the same time, the share of borrowers with loan from 3 or more lenders fell from 9.7%, fell to 9.7%. So therefore, this is something like, these are not necessarily, this is essentially a mixed news to us. That's in terms of latest trend. I'm almost done. I'll have what I've earlier discussed is AI in general for banking. I thought let me have some discussion on the AI and the MFI sector. The underwriting business, completion of the information revolution has come up because of bureau and direct benefit transfers. You now know much more. Operations gains are least ambiguous. For NBFC MFI with high touch, field heavy cost structure, the least glamorous applications may matter most. Multilingual voice interface with a low, literally client-based, automated KYC, document processing, collection prioritization, fraud and mule account detection, early warning on portfolio stress. All this can be benefiting for you guys, provided something like some consortium-based AI application are to be developed. The risk is slightly more fuzzy. It creates novel version of the same risk. Algorithmic collection system that operate on recovery can generate over collection pressure. And regulatory setting is RBI has come up with this free AI guidelines. They have laid down a comprehensive roadmap for embedding AI in the Indian financial sector. You are no exception. The compliance direction of travel, the accountability principles, and auditing and lending. All this your AI can be helpful to you, but need not necessarily be an unmixed blessing. So what is the risk map? This is very loose, personal, non-formal risk map. Cost of fund, if the inflation rate goes up, the rate formed up, cost of fund might go up. Rural distress with election-driven loan waiver rhetoric, the tail risk. Legacy of 180 plus, stock, elevated credit cost in some quarters. Ticket size migration, larger loans to fewer. You have seen this has come down. Proven borrowers can recreate over leveraging one segment down. And there are instances when there could be, even sort of recycling of loans. Funding concentration, banks retreating, NBFCs, MFI dependent on the wholesale market. Climate volatility, and I've said climate risk can be there, a first order underwriting variable. The mission question, if everybody moves up market, the political legitimacy that protects the sector's regulatory settlement erodes. And that's not a good news. So therefore, it's a mixed bag. At this juncture, your cost might go up. At the same time, you are more quality conscious, and certain selective AI usage may be beneficial to you. Plus, please do remember there are costs associated. What the leadership like you guys do in a transition? The sector at this juncture has done something rare in Indian financial history. It corrected a credit boom before it became a systemic crisis. And regulators didn't do it necessarily. You guys have done it. Every transition described today pushes the same way. In a democracy, the license to lend to the poor has political implication. So it's your take, some little bit of tough decisions, improvement of quality, certain realignment of your clientele, and withstanding and the political pressure together will define the leadership's role in the days to come. I think I'll stop here.
Thank you, sir.
Thank you very much, sir. And if there are questions, please, you are free to ask now.
Please do remember, I have not worked in your sector. So this is from secondary data. This is from what I could gather, and I have certainly, I would have felt far more confident to talk to a group of bankers, So, but please feel free to add your.
Just I want to know, actually not related to totally our sector. I just want to know. Now everybody is saying even the macroeconomy will be in trouble in coming years.
Macroeconomy will be trouble.
Will be in trouble, yeah, in coming years because of the geopolitical situation and a lot of issues there. So that recession will come or not? What you feel on that?
Good question. I don't think we have a ready answer. And none of us can give the answer, including Mr. Trump, because he himself doesn't know what he's going to do tomorrow. But more seriously, try to understand our economy is exposed to some bit of geopolitical risk. But we have a greatest domestic consumption. If you look at the basic identity, where from your GDP comes in, consumption, investment, government expenditure, export minus import. Clearly, exports will face a tough time. Imports will go up. So rupee will be under pressure and X minus N will be there. We are taking certain regulatory steps towards liberalizing our capital. The NRI deposits have been made more attractive. There are some allowance has been given for external commercial borrowing. That's one part of the story. But the innate strength of our economy is 1.4 billion people. Now, as long as they live, they will eat, they will wear some clothes, some demand will be generated. So because of that demand, we can quibble whether the growth rate is going to be from 7% to say 5%, but 5% is not a recession. A recession is defined by 2 consecutive quarters of negative growth rate. I am not seeing any show of recession in India by that yardstick. There is something called deceleration of growth, which is earlier we were growing at 7, now we are growing at 5. That's a deceleration. But that's not a recession. Recession is 2 consecutive quarters of negative growth, contraction. That I do not see for India. So therefore, let me reassure you, recession is not in the card in India. However, growth might have some downward correction because of the geopolitical risk. At the same time, please do remember, our strength is internal. We are not great exporting nations. Let me describe, since you asked this, Paras. So let me describe our balance of payments. We have a huge trade deficit. So we export much less than we import. And this is in dollar. So therefore, RBI governor cannot print any dollar. Therefore, you need to earn from somewhere or you need to borrow. We earn on current account from 2 sources. One is software, the other is remittances. Huge amount of money we earn in software and in remittances. Surplus. Because of this surplus, this huge deficit is turned into a very small deficit of something like 1 to 2% of GDP. That's statement 1. Statement 2 is, still this is deficit 1 to 2%. How do we earn? We earn from 2 to 3 sources. We earn from, number 1, what you call FII, foreign institutional investor, in stock market. That might face some trouble, that might be lull. Because there are various people said that our stock market is still quite heated up. There is still avenue for correction. That's 1. Second is FDI, foreign direct investment. Third is external commercial borrowing. Fourth is bank capital, the kind of things you take a loan from outside. And finally, the NRI deposits. So history has shown you can substitute one by the other at various points of time. At this juncture, FII flows there will be some drying up. FDI flows, there may be some drying up, but the other 2 things, external commercial borrowing, bank capital, and NRI deposits are coming. So I don't see a huge crisis. I see some small little hiccups here and there. Yes, as a result of which the growth might suffer from 7% to 5%, but I don't expect a lower than 5% growth rate in near future. Unless something else happens, something else. There's India and Pakistan starts a war, or there's a world war comes in. Those are absolutely beyond our technicalities, beyond our horizon. But otherwise, I don't see a recession in the near future.
Thank you, sir.
Okay, that's a good question.
Sir, Sajan Varghese this side. Yeah.
Yes,
sir.
Tell me.
Sir, I mean, there is a panicking kind of thing about on the AI implementation. When it happens, there'll be a lot of job cuts and other stuff will happen. But at the same time, we have more people are getting graduated with better qualification, better new type of new streams, and people are doing it. How AI is going to help people to add more opportunities, which is basically, definitely because as a India, as a country, our biggest strength is our human resource, human capital. So how is the new generation going to cope up, and whether it is going to be like a full-time employment or contractual employment, or people will be moving more towards entrepreneurial thing? How it is going to evolve our job market?
Good question. I'll tell you the following. I have been a student of technology history. Whenever new technology comes in, there is panic in the labor market. People think we are not going to. I grew up in Calcutta in 70s, and we have seen huge amount of struggle against computers. They used to call it automation.
Yeah.
The RBI Deputy Governor, Dr. C. Rangarajan, was manhandled by a few union people, bank union people, because computers were coming. Later on, computers came up as a result of, they named it automatic ledger posting machine, ALPM. Instead of computers, they said there are automatic ledger posting machines have come up. So whenever new technology comes in, there are panic. I mean, I am reminded of the following. When James Watt's steam engine came up, the London Hackney Carriage Association wrote to the Queen of England saying that you should not introduce this because our horse-driven carriage, we are going to lose our livelihood. Now, good that Queen didn't listen to them, and therefore we got the steam engine. So whenever new technology comes in, this happens. Point number one. Point number two, and that's more interesting, that we tend to over-exaggerate the power of the new technology. There are people among economists, I remember one, Darren Acemoglu, who is an MIT professor and a Nobel laureate. His calculation is AI beyond which, beyond a summary and things, it becomes very difficult. Its impact will be limited to 1 to 1.5% of global GDP. Therefore, basic nature of work has to remain. AI can do a decision. AI, pure manual labor is going to get reduced. But pure manual labor, I need not have to get to the data, compile the data. I'll get it from the internet, but at some point of time, I need to check it out. So your nature of work reduces from constructing a table to correcting a table. One. Second, AI needs prompting. AI does not know the thing that you have in mind. So therefore, in all those, there will be defined sets of other things. But I understand one of your questions. We all grew up that a person who is employed would get up early morning, be ready for the office, go for rich office by 9:30, 10, work up to 5 o'clock, 6 o'clock, come home. That model might change. Now, we have already seen that model got getting changed when the pandemic is there.
Yeah.
When the pandemic is there, first time we have seen you can be very busy without necessarily leaving your home. It was particularly for our female employed labor force, it became all the more difficult because unpaid household work, female labor force does much more. So she had to do the unpaid household work because she is at home, and at the same time, she has to be available in front of a computer. So increasingly, some of the so-called IT firms now at least are saying 3 days you have to come to office. So the nature of work might change. People might take more flexible work. People might enter the workforce, come out. For example, and there could be a very positive thing as well. For example, at some point of time, because of maternity, a large chunk of the women labor force, and by labor force I mean everyone, women labor force tend to not to have, leave, not to join the labor market at all, not to join an employment at all. Somebody therefore can think of take a 4 year off and still join the labor force after certain. So when the baby say is 3 year, 4 year, 5 year, that time you join the job. These are newer trends, newer things happening. You may do 2 jobs simultaneously, half and half. You might do various things differently. But I can give you one. My wife is employed in the advertisement sector. I have seen that sector, many of the people have been affected. But at the same time, there are newer jobs are coming. So net, I do not know. There may be some job loss in the initial days, but history of technology has shown that there has been never major job loss in terms of any technological innovation. And also that when a new thing comes in, you feel very, very excited. When, AI has summarized a full paper into a para, I felt very excited. When I realized what it does is an imperfect job. So I need to spend, earlier I might need an hour to write that para, write that page. I might need now 45 minutes to correct that, whatever comes from it. So it's not, it's not very automatic in the sense, it is not a science fiction when there is no people in an office room and only some computers are there. And the CEO himself or herself handles them as well.
Thank you.
Okay.
Thank you, sir. Thank you.
Thank you.
Anybody
Any
else?
question? Yeah.
Sir, I have one question till other people think of their question. Like the credit flow that happens to the sectors, it largely goes to the better rated institution. So there is a crisis of this big, small organizations where sadhans, resources are engaged how to arrange funding for the small and mid-sized companies. Some of them have kind of leveraged so much that they now need equity. So, and then, the problem has kind of accelerated so much that some of them have actually changed their model. Like you were saying, the JLG model is not anymore the only model. It has become like, say, they have chosen MSME or housing kind of thing. But again, the regulation comes up. There are so many other parameters also which needs to be taken care of. So, sir, how do you explain that, like in terms of growth? And
Okay.
and the second question is also, sir, you're saying that two negative growth season or quarters. That is what recession is. So suppose the uh, it is a negative growth one. Deceleration, that is what you're saying. So if it happens for two consecutive sessions, it is again negative, no sir? First negative, then again negative. So it again leads to recession. So how do you explain that? Yeah.
So this is let me have the second question first. It is
Yeah.
arithmetically perfectly possible.
Yeah.
Last time you got 90 marks in the maths paper.
Yeah.
This time you got 85. This is negative growth. Next time you get 80. This is negative growth.
Yeah.
But remember, 80 is still a high marks.
Okay.
80 is still a high marks. When you look at growth, you see incremental
Okay.
addition.
Okay.
If your base is already high, negative growth can happen. We
Okay.
have seen after 7 consecutive quarters of negative growth in your business, you have 1 quarter of increase.
Yeah.
Is there a concern? No. Because some of this negative growth in your business could happen essentially out of some correction. Correction is part of any business cycle. That is part of GDP. That is true for part of yours. That's your second question. As regards the first question, certain degree of correction is inevitable. Certain degree of weeding out is inevitable. The process, what the Darwinian process of what is called creative destruction. Remember my slide, 1884, 1954, and 2025. No companies were there. So companies, there has to be a process of creative destruction. How do you do it? Two things needs to happen. One is the companies themselves have to do belt tightening. And second, and more importantly, the risk appetite of our entrepreneurs also needs to go up. The same thing tends to happen in the debt market. In the debt market, AAA rated companies will get a corporate debt. But debt market, as in US, there should be different risk appetite for different kinds of papers. So that's what you tend to do. Okay?
Yes, yes. Thank you, sir.
Thank you. So otherwise, I understand. Yes.
Any other questions? If it is, we'll take last one question if it is there.
Otherwise, I understand between them and their lunch lies me at this current juncture. You know,
one quick question.
Yes, sir.
The part of AI that you have mentioned, and also about the job, how the jobs are going to change. So even our customer base is also changing. So one point in your last point, which you mentioned about the vision that the customer base moves upwards. So how much that is going to be a reality? Because, or will there something which I believe is there is always going to be a community or a customer base that requires a 75,000 rupees loan or a 1 lakh rupees loan.
Absolutely, 100%. Look, India is a diverse country. So people often look selectively depending on the logic they want to pursue. Remember, this is a diverse country. Remember, your per capita income, you are lower than Bangladesh. So all those sectors, all those people overnight are not going to be millionaires just because AI has come. This is precisely 100% true. So people who tom-tom of AI forget this very thing, that people may not have a smartphone. I was told by a responsible banker, CMD of a private bank, in the peak of COVID, people were forced to go to a ATM machine to draw their income, draw their money. So he was describing an old gentleman in a village in West Bengal. This old gentleman will ask his grandson, give his card, write the ATM pin. This grandson will cycle 5 miles, go to the ATM pin, withdraw 500 rupees, with the help of the watchman in the ATM booth, pay 5 rupees for that action and get another 5 rupees from his grandson, from his grandfather. So therefore, the transaction cost of the grandfather is 10 rupees for this transaction, 500 transaction. Do you realize? So India is a diverse country. There are various clienteles, various needs. We need various kinds of things. To see that AI will come and solve all the problems is something very, very difficult. Why, you tell me, why the informal money lenders still are there?
Yes.
They are there because they have an informational advantage. They know each and every people by their face. They know what is being cooked in their household today. They know whether they have got a fresh money or not. That's the advantage. So that's how you guys also will continue to remain in business. The model might change. there would be some more information maybe. The clientele base might change to some extent, but the basic thing at least continues to be there.
Yeah. Thank you, sir.
Thank you.
Sir,
Thank you so much.
sir,
And
another last
yeah.
thing.
Yes.
Sir, this reminds me in the context of creative destruction, sir. There are, like, say 60% of our members are small and medium size. So they would need our support to go through that creative destruction cycle. So I was speaking to one of those members. He is very desperate at this moment. So he was saying, why don't you restructure the operational area of the, which is of course at this moment is not possible. Uh, he said Ryzen district in MP, he operates there, and 2 blocks of Ryzen block mujhe de do. And then I asked how many MFIs operate there. He said 30, 40. So unko kaise bhagaएं? So that kind of thing. But he still expects a creative thing, and he suggested a pilot. Can you do? So, sir, the another information is there are 1 lakh plus PIN codes in this country, out of which so far we have reached, microfinance has reached only 21,000. So is a huge area to be explored, but due to certain operational difficulties, MFIs cannot go there according to whatever structure, whatever model they are operating right now. So that is a huge opportunity for us to
Absolutely.
build in this pilot into that direction, sir.
Absolutely. And remember, you are not in philanthropy.
Yeah, sir.
You are in a business.
Yes.
You are in a business for the poor people.
Yes.
And that will enhance welfare. But you are not a philanthropy. In the philanthropy business, somebody gives you free money and do it.
Yes.
So please don't bother.
Yeah. So, sir, because I have seen you last year also, I was in the batch, and this year also, somehow I am fortunate to be in your class. So I have seen your the perspectives is very expansive kind of thing that has given that perspective. So next year when we do this batch, another batch, the third batch, like we would like to have more of your deliberation, like
Sure.
on creative.
So, whatever Naveen orders me, I follow him faithfully.
Okay, sir. So because he is here, that is why I am
So
suggesting.
I
they're
entirely at the
asking,
disposal.
sir, they're asking 2 days full your session. Yes, sir. Thank you, madam. Thank you.
Thank you.
Thank you.
Thanks
And
very
also
much.
convey our
Thanks.
regards to Saibal and Mr. Gigi
Yes,
also.
please give our regards to
Yeah.
Saibal and others.
And all of you, once again, thank you very much. And sir, thank you very much for this
And
afternoon
me
session.
and Gigi sit in the board of BARD.
Bird.
Okay.
Both of us sit in the board of BARD. So
Thank
Gigi
you.
is a
Thank you so much, sir. Thank you. Thank you so much.
Thank you so much,
sir. Thank you.
Thank you.
Thank you. Okay, we'll leave. Thank you.
Thank you, sir.